Um, Good evening, friends, and welcome to our Sky High Symposium every Wednesday for women, by women. And today we have with us a chartered accountant and our Central Council member, one of the youngest member, we can say, Mr. C.A. Sridhar Mupala. So welcome, C.A. Sridhar Mupala, our Central Council member, to Sky High Symposium. This is Series 5. And Mr. Sridhar is taking care of MSS, that is member and student section, and lot of things are actually, this is the main thing which is happening at the ICAI. Along with that, he is also the vice chairman of student this board of studies, some student enrichment board. So he'll explain what all activities they are doing for the benefit of students at large, and lot of initiatives they have taken so that the members can take the benefit of, students can take the benefit of GMCS, which is happening at Hyderabad, our Center of Excellence, and he'll tell you in detail. So you'll have the benefit of Mr. Sridhar and explaining all the activities and initiative for the students as well as for the members and members and student section, and other activities what all is are his forte. And today's session we have CA Vinita Krishnan with us, who will be taking us through section 6, section 9 about understanding the residential status of the member and the practical issues which we all are facing day in and day out for our clients. If you have any question, her session will be for say 60 to 70 minutes. And if you have any questions, please put in. She will be answering all those questions. Post his session, we have a session by Samiksha Jain, Chartered Accountant, who is also IRS, and she will be taking us through the impact of impact of Russia-Ukraine war. So these are today's entire brief about today's session, and we have very learned coordinators with us. So we have CA Shalini Gupta, who is a office bearer and managing committee member of NIRC. NIRC, and also CA Ashwini Doshi, who is a past chairman of Sholapur branch of WRC of ICAI, and CM Meera Joisar. So with these, I hope this session will be really fruitful to all of you, and you will all have a great value addition post this session. And with these opening remarks, I request our Central Council member, C. Sridhar Mupala, to share his words of wisdom. Over to Mr. Sridhar.
Yeah, thank you, Preeti. Good evening, one and all. First of all, I really appreciate both Sri Priya and Preeti for taking up this Sky High Symphonies. And it's a series of the program that is going on. And I know that a lot of women members would be enjoying this one across the country. And in fact, when I was told about this program, I was really happy to see the way the series of activities, which we all could not, but Women Members Empowerment Committee, they are really empowering a lot. I really appreciate both of you. Now, coming to my experience, I'm predominantly into teaching. So I see a lot of students at the younger level, and especially the women. Sharing with Preeti also, over the period of last 15 years, there is a substantial growth in the girl students studying the CA course. So let me share you in the 2 days of the MSS analysis, what we have done, members and students. 28% of the total members are women members. When it comes to the students accumulated in total today, 45% of the students are girl students. So really appreciate for the people coming forward and the women empowerment that is happening. And I'm sure under the able leadership of Sri Priya, Preeti, much more activities like this will really give that encouragement and courage to the people, and we follow by that. So considering this, let me share you one small information which we have done it. See, we have found out that the MCS course and advanced ITT courses, which are impacting a particle, in addition to their practical training, are giving a good support in enriching the skills of the students. In the last 2 years, we could not conduct a residential program. The earlier part, prior to the COVID, the residential programs has given a wonderful output. Students' approach has completely changed. So in order to bring back that, we have started the residential program again, starting from 9th of this May. For boys, it is at Jaipur, and for girls, it's at Hyderabad. Both are at our COEs. And in order to make sure that this program benefits all the students, we have reduced the fee from 48,000 to 12,000. The regular GMCS course is costing them 7,500, and residential program for 30 days, including boarding, accommodation, everything, we have slashed it to 12,000 rupees. So for all the women, girl students, the GMCS residential is at Hyderabad. Request all the women members to kindly encourage the students and articles from your officers to take up that program, because their perception, because a continuous 30 days program comprising of different activities which enriches the skills of the students will be taken up, and students at large will be benefited. Now, coming to the today's part of the program, the two topics that are taken up are I really appreciate the speakers of the program, Vinita and Samhita, and they'll be taking forward you to the subject. But my part of basic understanding of what we are seeing today in the globalized scenario, no country is completely an independent. We are completely trade-wise dependent, and in return, the trade has an impact on the profession. So largely, we have an impact. If to make a small example out of it, we know the fuel price, the way it has shot up, and any impact on the fuel will impact all the commodities and industry at large. So the same thing, as a profession, we need to understand the implications that is going on and how long this is going to continue. I know that Samhita will give the brief details of it. So I wish both the speakers for today's session and make sure that they impart or they exchange the knowledge of today's part, and members at large will be benefited. So I once again thank both Sri Priya and Preeti for giving me this opportunity. So over to Ashwini, kindly introduce the speakers of today's session. Thank you very much. Hi, Ashwini.
Hi, Sridhar. Sridhar, just now you said that before introducing to Vinita, I had a query that you said about the GMCS course. So I wanted to know that if it is going to be so good, if there are students who had already done that course, can they re-register?
You're on mute. See, coming to the re-registration, yes, they can. No issue on that. But probably to my best of knowledge, for the last 2 years, there is no residential GMCS. So people who have done prior to that might have already appeared or completed their final. But still, if some students are interested, they can. But one point I would like to tell here is, people who have done this residential GMCS courses are exempted from their regular GMCS. It is not that they are doing this one in addition. Once they do this residential, that is automatically the GMCS is set to be completed.
Okay. Thanks.
Yeah.
I thank Preeti and Sri Priya for arranging such a dynamic lady. Vinita Krishnan, she is our speaker. Though she looks very young, she has got a rich experience of 16 years. Prior to joining Khetan and Company, she was working with Ernest and Young India Private Limited. From them only, I think she has learned to look, young, always young. And she has a broad expertise with the tax matters. She is looking after domestic and cross-border tax advisory, international tax, globalization, structuring of inbound and outbound investments, transactional tax, taxation of EPC contracts, M&A structuring of cross-border segments. She is also advising notable MNCs like their Indian entry and exit in various strategies. She has got extensive experience in M&A deals in matters ranging from share acquisitions, business acquisitions, and global deals. I think these are the terms which we are just reading and we are not coming across. So I'm very interested in to hear about it. Also, she has an expertise in tax due diligence, GAR advisory, structuring of distressed buyouts and exits, and restructuring transactions. She has penned many articles in various publications like Bloomberg, DNA, International Tax Review, Oxford, and been quoted in leading newspapers. She is also a member of Chamber of Tax Consultants, International Taxation Committee of Western India Council of ICI and IFA. I am really keen to hear from Vinita. Vinita, please take the charge of the session.
Sure. Thanks, Ashwini, for being so kind and complimenting me on being looking young. That has really pepped my enthusiasm. And Sridhar, very nicely you have put it. Before I start, I just want to thank the committee and Preeti ma'am and Shri Priya for giving me an opportunity. I'm very delighted to be here. And I also want to thank, I have my colleague Aveen, and I'm not sure Priyanshi has joined. They have really helped me in framing and drafting this presentation for all of you. So I'll just share my screen. Just let me know if it is visible. Just let me know if it is visible.
Yeah, it's visible. Go ahead.
Perfect. So, good evening, all. Just to keep the things in perspective, I'll be discussing today what is a residency provision under the Indian tax law, and how does it impact any person like you and me as an individual, or whether it could be a corporate entity, or it could be any non-corporate assessee. And what is the relevance of determination of residency and the nuances involved? So as you can see in my slide, the first thing to test is whether a taxpayer is a resident of India or not. And for that, the Indian tax law says that you have to look for a period from April 1st to 31st March of that year, which is called as a financial year or previous year. So the first thing is to know whether a taxpayer is a resident or a non-resident. And why the determination is important is, one, is the scope of taxability of income. Say a person like Vinita, if I am a resident of India, then wherever I earn an income, whether I have a bank account in US, whether I sell some stake in Singapore entity, or I work as an employee of a Dubai company, wherever I earn the income, whether in India or global, I have to pay tax in India. Whereas for a non-resident, the rule is global income, there is no tax in India, but there is only tax on the India-sourced income. Yes, there are nuances in terms of what is India-sourced income. For example, if a non-resident, say, sitting in Singapore, may be selling the shares of a Singapore company, they would feel there is no tax in India. But if the Singapore target derives substantial value from Indian assets, which is through a Vodafone test, then there is India, you need to pay tax in India. So the bottom line is, it is very important to determine the residency, A, to determine the own taxability of the taxpayer. And within the basket of resident, there are two baskets, which is resident ordinary and resident not ordinarily resident. And essentially mainly relevant for a taxpayer like an individual or a person who is like an HUF. For them, tests are additionally important, and it is more like a relaxation, even though you may be a resident. But if you are called as RNOR in loose terms, then your offshore income is not taxed in India, only India-sourced income is taxed in India. So that's the first reason why residency is important. The second relevance is, as chartered accountants in our profession, we would be required to help the clients in filing their tax returns. So when we are filing the tax returns, we need to designate whether they are resident, non-resident. And the moment they are non-resident or resident, there are certain reporting requirements in terms of offshore assets. So if you are a resident and ordinary, you need to report all those offshore asset requirements in your tax returns. So you need to ensure you call the right details from your client. What is the category of the residence? And we do that assessment. The third reason why it is important is from a withholding tax perspective. Say, for example, I may be buying a house. I feel that the person who's selling to me is a resident, and I blindly go and deduct 1% TDS on the gross sales consideration. And it happens that the person has a plan to go out of India and they become a non-resident, or they are already a non-resident. In that case, the seller of the house, the tax rate for them will be 20%, assuming it is held as a long term, as compared to 1% had they been a resident in India. And if as a payer, whether I'm a resident or a non-resident, if I am not being very careful when I make the payment, what is the period, what is the category of the person whom I'm making the payment, and if I do any shortfall in withholding, then the tax officer can come behind. Therefore, it is equally important, even as a payer, to know whom he is making the payment, whether the person is a resident or non-resident. Keeping this spirit in mind, I'm going to discuss the nuances involved when a person will become a resident or a non-resident. So coming back to the slide where I'm first talking about individuals. The first thing is, it is a very simple test, physical presence. If Vinita is in India, say from April 2021 till March 22, if any time in that period I'm here in India for approximately 6 months, say 182 days, then I am going to be a resident. But consider a situation where I am going to be in India or I was in India for not 182 days. Then can I just sit back and relax that, oh, I'm not going to be a resident? No. There is another test, which is like in a particular period, say April 1, 21 to March 22, whether am I in India for at least 60 days? If the answer is yes, then I also need to look back and see whether I was present in India for at least 365 days in any of the 4-year past periods. If the answer is yes, then I can become a resident even in that particular year I was only present for 60 days or 65 days, I can still become a resident in India. There are some exceptions to this rule where they have said that if there is an Indian citizen who wishes to go outside India for the purpose of employment or as a member of an Indian ship crew member, then for them, instead of 60 days, there is an expanded period of 182 days to be tested. So here there are important observations to be looked at. This expanded period of 182 days is applicable only to an Indian citizen. So let's take an example, as Sridhar was also mentioning, in this period or era, it's very common for people to be very, like globalization has made life very simple. Like today we are able to speak over this computer and we can just attend those sessions. Similarly, it is very easy for anyone to be mobile, going out everywhere or anywhere of the country. So, and also India as a concept does not currently have a dual citizenship. There are citizenship like in form of an OCI, which is called as overseas citizens of India. They may, for example, hold a UK passport and they may not have an India passport. Now, when such people, while they are going to be in India, they go out for employment, will they get this period of 182 days? The answer is no, because they are not an Indian citizen. So the first test is to look at whoever is planning to migrate abroad and they want to take benefit of this 182 days test. We need to know, are they going to be an Indian citizen or not? Because there is also a scope that they were Indian citizens, they have given up their Indian citizenship and they have become citizens of other countries. So it becomes very important because here there is no PIO who can take the benefit. The second important point is it is for the employment outside India. Now, in this globalized world, it is very common for Vinita being sent for BD trips. She's been going in and out for scouting clients for export related work. She goes out regularly and somewhere she says that she is out for employment purposes. She will not be able to take benefit of that section. But if she is planning to be deputed for a long-term serious in an overseas branch of an entity, or she is going to join an offshore employer with the purpose to join as an employee in that company, then she can get the benefit of the expanded purpose of 182 days. So how do you demonstrate practically that I'm going out of India for employment? It helps if we have those documentation in place, say the period for which we are going to go out, what is the visa which we are going out, whether we already have an employment letter in place. Now, it can also be a situation where I don't have plans today because I want to start my business. I know there are good customers there. I'm going out and I'm going out on a visa, which is not a tourist visa. It is for a work visa or business visa where I'm going to develop my business abroad. So even a self-employment should be allowed for the expanded scope of 182 days. And the next test is for someone who's outside India and he wants to come back to India, say just on a visit. Now, plain vanilla visit, when I say I'm coming to visit you, I'm coming to your house for a visit, you'd always expect me to go back to my house. So while the term visit is not defined, the normal nomenclature is an expectation for a person to come to India with an intention to go back to where they have come from. Say they may come to India for a visit on a vacation to visit their parents, or they may come for a medical visit, or come as a tourist, they want to visit India. But they, as long as they have an intention to go back, then they can also take the benefit. They can be in India for more than 60 days, provided they can be there up to 4 months if they have an Indian sourced income up to 1.5 million or 15 lakhs. And they can also be in India for up to 6 months, roughly, that is 182 days, if their India sourced income is less than 15 lakhs. So this is another important criteria to look at it. Now, in this era where there are instances where someone is always stationed abroad, say they were in US, but they want to pack their bags and come back to India, but they want to look out for further employment. Can they really take the benefit of visit? Has to be seen on the intention of the person who's coming back to India, whether it is a temporary visit or they will be going back from India for a serious employment or business outside India. The last category is a deemed tax resident, which I will take shortly. Before that, as you can see, while the moment you're physically present in India, you can become an Indian resident if you meet those the thresholds mentioned in the slide. Say in this pandemic era where the COVID lockdown was announced, some people were scared to travel. Some people were not allowed in a country to travel. Some people were not traveling because the flights were not operational. So they got stranded in India. Now, what happens to those people? Whether would you say that even though they were physically present in India, is there any relaxation for them to be called as resident? The answer is yes and no in a way, because the relaxation was clarified by CBDT in a circular for the March 2020 financial year, where they said they gave a very liberal or very limited relaxation for some period time in March to April. They said if you are in India stranded, you can get the relaxation and it would not be counted while computing your 182 days or 60 days or whatever is the days as applicable. But for the financial year March 21, March 22, there is no specific relaxation which was announced. Yes, the CBDT did clarify that if you believe that you are going to become resident of both the countries, then come to us. We will help you and resolve your issue. You can approach us by making an application. It is interesting to note, there was a case of Delhi High Court in the case of Suresh Nanda, where the Delhi High Court said that where Mr. Nanda was forced to stay in India. He wanted to go out desperately. He had businesses abroad. He had no intention to stay in India. But his passport was impounded and he was involuntarily required to stay in India because the court did not release the passport. Yes, ultimately, for whatever case reason, the passport was impounded, was ruled in his favor. And somewhere he took an argument that I was forced to become a resident because otherwise I had no intention to stay in India. That is one case where the court went on to look at the intention, even though the physical present test was met. So this is something which has to be, if one has to take and view basis that judgment, people have to be very careful in their assessment of facts, whether it will automatically apply, because it is not strictly coded in the law, but it is basically coming with the intention why someone was being present in India. Moving on to this slide, which is called as deemed residency, as I just discussed that even though you are physically present, you will be called as a resident in India. And there was one exceptional case of Suresh Nanda where they tried to exclude certain period when he was forcefully present in India. Now, let's take an example where the Indian law has been amended to say, even though you are not physically present in India at all, but if you are an Indian citizen, you can still be deemed to be a resident of India if you have an India sourced income exceeding 15 lakhs. Point number A. And point number B is you are such an individual who is not required to pay tax in any of your offshore or outside country, like just in very simple terms. Now, by introducing this law, essentially India is saying if you are an Indian citizen, irrespective of your physical presence, there can be a residential impact in India, whereby you will be called as a resident of India. Now, this provision, when India had introduced, there were a lot of open points to be debated. And the law has said that what do you mean by a person who's not liable to pay tax? The way it is defined, essentially it means if Vinita as a person, the intent was she was hopping between many countries, and whereby she was able to say, I'm neither a resident of India, neither a resident of Singapore, neither a resident of Dubai, because I'm being a tourist, I'm like a nomad, I'm traveling to many countries. But the way it has been defined, it somewhere leads to an interpretation that even though you may be otherwise a resident of a country, say a Middle East like a Dubai, but if as per their home country, if there is no tax on you as an individual, and at that time being in force, if there is no tax, then you may be still regarded as a resident in India. In this context, it is important to note historically, in the context of India-Dubai tax treaty, there were court rulings where the court had ruled that to claim a treaty benefit under Dubai, you don't need to necessarily pay tax in Dubai. Even if there is a potential ability to pay tax in future, the government has a right to impose tax on you. It should be good enough and you should be regarded as a resident of the treaty. Also, in the context of India-Mauritius Treaty, the apex court in the case of Azadi Bachao Andolan also held that for a Mauritius resident investor, even though they are not required to pay tax, they will be allowed to take a benefit of the treaty benefit. So keeping these positions in mind, the liable to tax was interpreted liberally in the Indian courts while there were conflicting rulings to say that they should not be given any treaty benefit if they are not actually paying the tax. So considering this amended definition, if you are advising any person who is sitting abroad, you need to know, is he an Indian citizen? If he or she is an Indian citizen, you need to ask them whether are you paying any tax in your home country. If the answer is no, we need to check the reason for not paying the tax. Is it because they are an exempted category, say a charity or a fund like a sovereign fund, or if the nature or the source of income is exempt, say a capital gains, it is otherwise they are required to pay tax, but on capital gains there are exemptions subject to conditions. Then in those situations you may not be hit by it. Otherwise you need to look closely the person whom we are advising. And even as the person who are residing abroad, they need to look at it, and all is not lost. Even though you may be deemed to be a resident of India, the category of resident is called as resident and not ordinary. And as I had mentioned in my first slide, that for a non-resident RNOR, the global income is not taxed in India. So somewhere there is some silver lining to those residents. And the second way for them is to also look at it, whether if there is any tax treaty under which they are eligible to claim, whether even though they are a deemed resident for the Indian domestic tax laws, can they be called as a non-resident thanks to the way it is written in the treaty? Say, for example, India, Dubai may give you that benefit, but India, Oman, if it is linked to the person as if they will be a non-resident only if they are liable to tax, then there may be certain interpretational issues to be looked at. The second important impact of someone being deemed resident in India is there are certain information exchange with the Indian governments typically do with respect to an Indians, and the other country would usually exchange if they are a resident of India. They would normally exchange subject to what is allowed in the exchange of information article and what is there agreed between India and this country. Now, if you are going to be a resident and not ordinarily, whether your information can be exchanged is something which needs to be looked at. And the last important point is from an overall computation of 15 lakh criteria, it's a chicken and egg. As I had mentioned, to know someone who is a resident or not, why it is important is to decide what is taxable in India. If you are a non-resident, India-sourced income is taxed. Offshore income is not taxed. Now, to determine whether you are a resident or not, they are saying you look at how much income you're earning from an Indian sources. And if it is crossing 15 lakhs, you need to test this deemed residency. So there is some chicken and egg situation. But the way practically approach has been taken is, as far as India is concerned, if you have any Indian sourced income, if it is more than 15 lakhs, you have to look at this impact of this provision. Now say you are earning an income in form of share of profit from a partnership or an LLP. It's an exempt income. Would you include in your 15 lakh criteria limit? There is no express exemption, but perhaps you may be able to exclude it depending on, what is the exempt income which we are looking at it. Now, as I had mentioned, for any person, whether they are forcefully called as a resident because of the deemed residency impact in India, or because they are otherwise, say, a resident in other countries. Say an example where Vinita is spending only more than 60 days in India, but less than 182 days. And she is also equally spending so many days in US. Now, US law says you are a resident of US. Indian law says you are a resident of India. Now, in both the countries, she is required to offer assuming the global income. Now, what should she do? Because as a theory, even if she offers her global income tax in India, India should give her credit of taxes paid in US if India treats her as a resident. So this becomes an important assessment, especially for the people who are spending time in two countries, equally important, and if there is a risk that they can become a dual resident. So there are certain subjective criteria mentioned in the tax treaty. The first criteria is, does Vinita have a permanent home, whether in India or in UK? If, for example, if she's a dual resident of UK and India. Now, when I say permanent home, the feature is the home should be available to Vinita at all times. She should be able to access it, should not be for a short duration. And assuming she is able to satisfy the test in both the countries, and we are not able to make a determinative criteria, then we need to move on to the next test, which is dependent on what is personal and economic ties of India, which is otherwise called as central of vital interest. So where is her family based will decide where her personal ties are mentioned. Say she alone moved to UK for the work, but all her parents, her husband, her kids are sitting in India. In those criteria, her personal ties will be leaned towards India. But say if she has equally strong personal ties in both the countries, again, it becomes very difficult to determine the sole criteria. Then the economic ties are something which is helping Vinita to earn an income where she has an employment outside India, business outside India or in India, or where is her asset base sitting in India, whether outside India, inside India. And even if basis that test, if we are not able to make an test that where is she getting, if it is again divided between both the countries, then we go on to the third category, which is habitual abode. Now, habitual abode in simple terms means where is she staying or spending a lot of time. Even though I may be resident of both the countries, it could be a scenario where I'm hopping and traveling in many other countries for my work or for my personal reasons. In those instances, the test is to see where I've spent the more time in those countries. Again, if in both the cases the answer is yes, the next test is dependent on the nationality. Where do you hold the passport or which country you are a citizen? And in extreme case, even if that test is not being met, then both the countries will have to meet mutually under the mutual agreement procedure and determine the tax residency. Now, the way I explain this is it's like a penalty corner. First, you look permanent home. It is one goal, both the countries you're meeting. Then you look for the next test. What is the goal position? This is how you need to test. And this has become increasingly important in these days where people want to enjoy the freedom of staying in multiple countries, and where we have seen large Indian promoters, they want to go out and they are saying that we are very serious to sit out. At the same time, we also want to spend equal time in India because we have our family here, we have other businesses running here. So how do you balance it and achieve a tiebreaker becomes very, very important. And also tiebreaker assumes important because of the deemed residency, which I had mentioned in my previous slide. And so as a chartered accountant or as a taxpayer, we need to look into it, whether there are any nuances which we need to look at it because of the dual residency in both the countries. That is something which becomes increasingly important. Now, I'll just go slightly detail in the categories or the baskets of residents, as I had mentioned in my first slide, ROR and RNOR. Basically, RNOR is more a relaxed category of residents, that even though you are wearing the hat of resident, your global income is not taxed unless you are controlling it from India. So from that perspective, there are 4 categories. One is the person, say, example of the stateless person, like a Dubai person who is deemed to be a resident of India. He would still be called as resident, but not ordinarily. That's how the law has worded. Also, a person who has been coming to India on a visit. Now, they spend time more than 4 months in India, but less than 6 months. They can also take the benefit of RNOR category. Or someone who has never come to India, say they come to India for the first time now, then for the first 2 years, because of if any time 9 out of 10 preceding years they have been non-resident, they can be called as RNOR, and similarly the 729 test to be tested. So why this is important? Again, to determine the classification, the reporting requirement, the scope of taxability while determining your taxable base in India. This categorization becomes very important. As I had mentioned in my first slide, all this is important to determine in nutshell the tax rates for a person, the withholding tax obligation, the foreign asset reporting. Now, there are certain nuances if a person is an deemed resident thanks to the new amended law, but they tie break in favor of Dubai because they are otherwise very actively present in Dubai. Now, are they required to report their foreign assets? Or are they required, they become resident because of other reasons and they also tie break? Are they required to report other foreign assets? This becomes very crucial as there is no strict guiding principle. One view is since they are RN, OR, and the tiebreaker is not relaxing them from overall obligations, they need to report. Another view is since ultimately they are in tie breaks and they are called as non-resident, they are not required to report. So these are the nuances one has to take a call while looking at the taxable position for a particular year. Now, I just want to focus now on other taxpayers such as company or a non-corporate like a partnership. So the golden rule is for any non-corporate assessee like a partnership firm or an HUF, it is dependent on where is your control and management lying. Even if there is a part control in India, you can become a resident. And say, for example, there is an LLP in India, there is, it is always going to be a resident if it is incorporated in India. But if you have other partners also controlling from India, even though it is a foreign offshore partnership firm, it may be a resident in India if there are some partners who are taking decisions sitting in India. So it becomes important to decide for a non-corporate whether they are an Indian resident or a non-resident. When it comes to company, it is dependent on a subjective criteria. Earlier, for a company also, it was a very simple criteria whether the whole of the decision making was in India or not. But now the law as it stands, it is dependent on a POEM test, which is called as place of effective management. So for an Indian company, say I've incorporated a private company in India, public company in India, I'm going to be a tax resident. But the POEM test is more so relevant for a foreign company. Say I have a Singapore company, a Mauritius company, a US company. Now, even though I may be incorporated in those countries, will I still be resident of India? The answer can be yes, if your decision making happens from India. So one has to look at the POEM test, which I will elaborate in more detail. So one important point is, it is very common to see there are in this era where there are in an IT sector, there are a lot of Indian companies, Indian partners who have floated partnerships or limited liability companies like LLCs in the US or LPs, they are partners abroad. Now, from that offshore entities perspective, it is very important to determine whether the offshore fund investing in India will qualify as a company or any other category of a non-resident, non-corporate assessee. Because the moment if they are a company, they can decide where the POEM is lying. But if they are a non-corporate entity, they don't satisfy as a company because for a company, it needs to be incorporated as per the local laws of the company. So if say it is a limited partnership or it is a liability LLCs, are you really incorporating, or it is just formed by a document which leads to an interpretation? And so therefore, for any foreign investors looking at India, we need to be very clear whether are they having whether they will be categorized as a company for Indian taxation purpose or as a non-corporate taxpayer. And moving on to companies, there are important points to be noted. It is in a very simply put, a foreign company will be treated to be a resident in India depending on whether they have doing a decision making in India, or who is taking the decisions, are they Indians or not, depending on which business they are in. Say, for example, they are only having a passive income, say in form of a capital gains, royalty, interest, assuming they are not into the business of lending and they have a passive income. For them, they need to test two things: whether the entity, the place at which they take the decision is important, and people who take the decision are important. So they need to ensure that those entities, when the people who are taking decisions are not Indians, they are non-residents of India who are taking decisions. The place at which decision is taken is not in India, it happens actually outside India. And per entity which is engaged in an active business, an active business, here there is a catch. Say you would be feeling that I am doing a trading operation. And if the trading operation where you're purchasing from your Indian affiliate, which is a related party, you're selling to an offshore affiliate, which is also your related party, then even though you may feel that I'm actually doing a trading operation, it can become a passive income for the POEM test. It would not qualify as an active test. So for the active business, it is relatively a simpler test, because it is always presumed that if the meetings have happened abroad, then you have a POEM which is outside India. And there is some benefit or breather for small companies if they have a turnover of less than 50 crore in a particular financial year. Then for them, the POEM test is not applicable. And even though they may otherwise fulfill the test, they will still be qualified as a non-resident. And there are some more subjective tests in terms of where are you spending your expenses, where is your asset base, as I have depicted in the chart, and where are your employees located. These things becomes especially important where you have an Indian company setting out their presence in, say, Singapore, Dubai, where they're going out of India. And they say, how do I ensure? In their mind, they feel Singapore, it is incorporated, so there is no India risk. You need to test whether there is any implication of POEM for the Singapore company in India. And some of the things, some more subjective criteria, I say in this era, everything happens in video conference. People are not actually physically going to those meetings. Then one would look into where those people are located. Say, if I'm taking the meetings from India, whereas Ashwini and Sridhar, and Preeti are taking the meetings from Singapore, then majority is taking the meeting from Singapore would be the way to look at it. So there are a lot of factors. It is a subjective test. And especially where you have a shareholder like an Indian company who's the parent of a subsidiary, the Indian company would normally want to keep the control in their hands and say that, you need to report to me. If you're hiring a person, you need to come to me. It is very important to ensure that the shareholder is not stepping into the shoes of the board. They are only exercising the protective functions. And what is protective and what is actual operational control has to be seen on fact case-by-case basis. So some of the things which we have seen in our experiences, first is who is in your board. You should always ensure that the board of the foreign company consists of majority non-residents, Indians, as far as possible, avoid Indians. And if Indians are inevitable, they should be in minority. And whoever balanced people are there, they should have good CV, they should have good industry experience, so that nobody alleges that even though Indian is in minority, he is mainly the decision maker. So the board composition becomes very vital as we look when we plan the affairs of an Indian entity setting up their presence abroad. Then the place of meetings. We should ensure that as to the extent practically feasible, the meetings are happening in the registered office, which is outside India. And if there are VCs, which are inevitable, majority of the people are attending the meetings outside India. And even if some Indian has to attend, they should try and see if they can actually physically go to the country, so that to that extent, the decision making is taken from outside India. The next important point is, how are you, presenting yourself in front of the world? In just 1 second, sorry. In terms of the shareholder protective rights, whether the shareholder is exercising a protective role, or are they exercising a shareholder or as a board role. To give you an example, say, who should be hired as an employee? The employee letters, employee designation, who is interacting with the customers. It should not happen that there is a talent pool sitting in India and they are doing this. It should be done by the employees and the board of the foreign entity. Who's signing the contracts? Who's having the signing authority of the bank transactions abroad? It should be with the foreign directors, not with the Indian directors. These things helps, and how a person presents himself in the social media. This is also equally relevant while determining the permanent establishment test, because from a permanent establishment test also there are a lot of criteria when people get into it as per the local laws. So especially if Indians are going abroad, we tell them that ensure these tests are kept in mind. The employees don't go and say that the Indians are having a global role. It is okay to have a global role. That per se will not mean the poem is in India. It is okay for an India to be 100% shareholder of the foreign entity. That per se does not mean the poem is in India, because the shareholding, ownership, and the way the businesses run are two separate concepts. So long as we can demonstrate that the business is actually run by the board of directors. And how do we demonstrate? Say the minutes of the board meeting clearly talks about who attended the board meeting. There were non-resident directors who are credible, who asked the right questions, and the Indian, or they were only observers on the board. While it may not be always practical to exclude Indians if they have a sizable business abroad, it is okay to have an Indian in minority. But who's taking the decision should be someone who is having a majority control. So need be whether a person needs to migrate from India, if they are seriously considering to expand the business outside India, needs to be seen on a case-to-case basis. So these are also from our experience, how the meetings are worded, whether it is saying that the chairperson was an Indian director who's taking the lead, or is it the non-resident person? How the minutes are accounted, who is informing the board, whether the board has authorized anyone to go and sign the documents, whether it should be the non-resident director or who is signing the authority, who is appointing the, say if it is a sale of shares, who is appointing the advisors on board, who is signing the deal. It should help if the non-resident directors are doing these things, because tomorrow when these things come and tax authorities scrutinize, it helps to demonstrate that the decision making indeed is taken by the board of directors of the foreign entity. So documentation becomes very key, how you have recorded. So we should spend time and see how the minutes actually happens, how the minutes are recorded. Even if there is a participation from India, what is their role to ensure that the decision making is taken from outside India? Because it is naturally going to happen. You have an industry's expert sitting in India, you would want to take the benefit of those employees. It is not that they should not participate. They can give a service. It should be non-binding in nature, recommendatory in nature, and it is the decision of the board who takes the call. So these are some basic do's and don'ts one needs to keep in mind, especially from a corporate point of it. Then what is the implication if the foreign company has a poem in India which is not a desirable state? Is because the global income of the foreign entity can be taxed in India. Then when it comes to tax treaty benefits, there can be again a tug of war. Are you entitled to treaty benefit? This is commonly seen in the context of investors selling their shares in India, or they are trying to claim a treaty benefit in context of any other important streams of income. Are you really a resident or a non-resident of India? So if you have decision making, you have advisors sitting in India, it gets lean and saying that you are a resident of India or not. It has to be demonstrated, because otherwise there can be increasingly tax cost in India as compared to a resident and a non-resident. And if there is a poem, you may be able to offset your losses. You may be able to get the credit of the foreign taxes paid. But these are all things which will involve, lot of legwork, how to actually compute the income for the year. So the best situation is to avoid a case to have a poem. And yes, even if there is a poem, it is not an automatic. There are filters put in the Indian tax law. The tax officer is required to, check and get approvals of his seniors, such as commissioners, go to the collegium board to get the right to say there is a poem in India or not. So one has to really plan their affairs to ensure that the poem is not being leaned towards India. And even for a foreign company, if say, for example, for a non-corporate entity, if you have become resident of India as well as you are a resident of other country because you're incorporated in that country, say, for example, there is again a similar tiebreaker test, which I had discussed for individual. There is also a tiebreaker test, which is applicable for a corporate, but it is linked to the place where effective decisions are being made. So once the effective decisions have been made, and currently, as you would know, earlier we used to only look at the tax treaty between India and the relevant foreign country. Now there is also a multilateral instrument which is called as MLI, whereby what essentially it is doing, it is like that there are many countries who have signed this MLI, whereby even if you are reading a treaty, if the treaty partners have agreed that the provisions of the treaty has to be read with what is also agreed in an MLI. So for an MLI, if India says, hey, the Singapore company is a resident of India, whereas the Singapore country and the Singapore company believes that it is a resident of Singapore, then they need to approach a competent authority. This is what is given as per the MLI terms, whereby the tiebreaker will be ruled out, and it is not just what will be decided by the taxpayers. So to conclude, if I may say, it is very important to take the right steps. Whether if I am very clear in my mind that if I am in US, I want to come to India for all good, what actions I need to take care, what would be my taxable income in India? Because if I'm coming from US to India, I may be able to take the benefit of RNOR status and plan my affairs when I can get my global income not within the tax net. Similarly, if I am an Indian, I want to migrate outside India for a valid commercial reason, I need to take the right steps. Say, for example, before I go, I should ensure that I designate my accounts, like the bank accounts in India, and take an NRO status. I have the right visas in my hand before I leave the country, so that I can demonstrate tomorrow that I went out for serious business or employment activity. I should ensure if I have an offshore bank account, I'm getting a real employment income or a business income year on year or monthly sitting there in that account to demonstrate that why I'm going out of India. And also in terms of the documentation, if I am ever going to become a citizen or if I am going to be a resident of both the countries, is there something I can take care to avoid multiple tax issues in both the countries? I should keep that in mind before I migrate. Because say, for example, in my example, which I said, an OCI card member. Now, if as an OCI card member, you want to seek an employment outside India, plan your affairs that since you will not get the 182 days relief, would you want to go right in April 1 or you want to go before the 60-day test is met? So that you ensure that you are a non-resident for India. So depending on what citizenship you are, you need to take the right steps for migration. As next step is for the do's and don'ts for the companies and for any other entity. For Indians who are going abroad, the do's and don'ts are very vital. While sometimes it becomes very theoretical for practically business payers to really implement that. But to the extent possible, we should try and see whether there is good team sitting abroad, there is good employee director sitting abroad, the documentation clearly reflect right from the day when the signing authority of the banks, the agreements were signed by the foreign directors. And when in India, if there is any Indian director or any foreign director who hops to India because they have decided to go to Singapore, for example, they should not be taking any cross decisions to ensure there is no P or OM in any of the countries. So hygiene check becomes very important. And last but not the least, the documentation assumes a lot of importance these days, because how we project ourselves is reflected in the documentation. So even though I may want to take a position, but if the documentation is not properly put, even though the meetings have actually happened outside India, but the meetings, the board resolutions do not capture it properly. And it says it just an important meeting was done in 2 minutes, 5 minutes. And while normally people would have debated, they would have taken more time to take the decision finally. It is important that the right documentation is put in place so that tomorrow, even if questions are raised, we are in a position to explain the right position, whether it is to India or an other country. Happy to take any questions. Sorry, Ashwini, I couldn't hear you. I had some connection or issues.
Hello.
Yeah, Ashwini, now I can hear you. So sorry.
Yeah, Vinita, the subject you handled was very interesting, and I must say that though I'm from the Mofussil area, and we had never actually paid so much heed to RNOR factor, because here being everyone resident, you really made us listen this carefully, and there is so much that we should look into, and you have very wisely told us to take the precautions while migrating. So I really thank you. As on the date, I don't think there are any questions. So I really thank you for the deliberations you have given it to us. Thanks.
Thank you so much, Ashwini.
Yeah.
Hello, good evening, everyone. Here we end the first session. We had a fabulous session from Vinita, and we are going to have a much more exciting and knowledge-packed session from Samiksha Jain. It's really a pleasure to introduce Samiksha, whom I've seen growing into a beautiful lady and a beautiful professional. She's cleared her chartered accountancy in the year 2015, and right through all the three major the levels, she's been a rank holder. She's been rank 4 in CPT, 28 in IPCC, and 43 in CA final, a gold medalist with 100 on 100 marks in IPCC in 2 subjects, financial accounting and costing. And she secured all India highest score in law in her CA finals. Thereafter, she joined us in RC Jain and Associates, which apparently is her father's firm, but a well-deserved join, wherein she specialized in indirect taxation, and she, at the age of 21, authored a book on service tax. She also delivered seminars in the Thane Division of Service Tax Department itself. Thereafter, having practiced as a chartered accountant, she aspired to be on the other side of the table, where she took a decision to prepare for her UPSC examination so as to use her knowledge in the chartered accountancy profession more directly in nation building and creating a larger impact. Some of the services in this exam are the IAS, IPS, IRS, the IFS, etc. She presently is posted under the Ministry of Postal Communications And in the 2020 UPSC exams, she ranked 333rd out of 750 ones who actually passed out this examination. There are around thousands of people who appear this exam and just around 750 pass, and we are fortunate to know her personally. I really feel so glad to introduce her, and I am eager to listen to her. So Samiksha, without taking too much of time, I directly hand over the baton to you, and please take us forward from here.
Sure. Thank you, Meena ma'am, for such a kind introduction. And mostly everybody present here is very senior to me in all respects. And I am extremely delighted to be here. Especially, I would like to thank the Women Empowerment Committee for providing me this opportunity today to speak on a topic which generally we do not see a lot of seminars happening in the ICI, which is the impact of geopolitics on the profession and on the industry. I would just like to take this opportunity before I start to tell all the female chartered accountants present here that where I am presently in the UPSC, the civil services, there are a number of female chartered accountants whom I know who are posted as IAS officers, IPS officers, IRS officers, and who are contributing significantly to the country. So kudos to all of us, all the female chartered accountants present here who are making a difference with the training that the CA Institute provides us. Now, coming back to the topic that we have today, the impact of geopolitics. First of all, the first thought that comes to our mind is, the Ukraine-Russia war and everything. How does this possibly impact us? How does this impact me as a chartered accountant today? So the endeavor that I will be having today will be to make us all understand that even events like Ukraine-Russia war so significantly impact the industry and the chartered accountants. And I'll give you an example. For instance, the Ukraine-Russia war, as we all know, today the RBI has raised the repo rate from 4 to 4.4 by 40 basis points. This inflation that we see around us, the rising petrol prices, the power outages, the shortage of coal, the record GST collections at 1.68 lakh crores, all of this can be attributed to the Ukraine-Russia war. As female chartered accountants, we feel that, there is already so much to learn, so many updations happening in the field itself. And, and when do I find the time to update myself with what is happening in the world? But it is very important. We see that we have to be able to talk to our clients, to talk to our peers about what is happening. And in the coming few minutes, my endeavor will be to explain briefly what is happening in the world in terms of geopolitics. Mostly the focus will be on the present Ukraine-Russia war. And then I will be explaining how this war impacts the Indian industry as well as the global industry and thereby our profession. So I hope by the end of the session, we are all able to converse with our peers and with our clients that, I know what this war is all about. And I can tell you what impact it is having. So coming to the Ukraine-Russia war, let us first try to understand what this Ukraine-Russia war essentially is about. So we all studied long back in our history in school days about the Cold War. So basically, there was a time when Russia was at war with the US and the West. So this kind of mistrust, which was there in the Cold War era, still continues. So if you basically look at the world map, you have Russia on one side, which was a communist country. And then you have the capitalist bloc, which was the US and the Western Europe. Now, they had a security grouping. The West and the US had a security grouping, which was called the NATO, or the North Atlantic Treaty Organization. This was basically a security organization wherein they said that, okay, if there is an attack on any of us, then all of us will fight against that enemy. And this was mainly directed against Russia. Now, if we see today, then Russia's neighbor is Ukraine. So Russia is in the Far East, and there is Western Europe on the other end. And in the middle, between Western Europe and between Russia, we have a country called Ukraine. Now, given that we understand Ukraine should be pro-Russia or at least neutral. But since 2014, the developments that have been happening have been such that ever since 2014, the Ukraine head of the country, the president of Ukraine and the prime ministers there, they have been basically speaking of pro-West. So Ukraine recently has been showing willingness to join the NATO and the European Union. Now, if you have a neighbor very close to you, which is basically talking of being friends with your enemy, then you're definitely scared there. So this is what is happening with Russia. It has basically been under a security threat if Ukraine joins NATO. Because if that happens, then even the missiles could directly be placed within Ukraine at a very close distance from Russia. In this case, therefore, after a lot of provocation that happened, Russia sent its troops to Ukraine. And it has basically been warning Ukraine that we do not want you to join the NATO. We want you to remain largely neutral, if not pro-Russia, at least neutral. So this has been making news ever since February. It has been 2 months that this issue has been news. And even now, you will continue to read news of a lot of shelling, a lot of humanitarian crisis happening in Ukraine. A number of civilians have been killed. Our Honorable Prime Minister launched the Operation Ganga, wherein we managed to take out a lot of our medical students who were stuck there. But the issue continues to remain. Now, if we broadly look at what implication this has, now one may feel that, okay, the Ukraine-Russia war, it's far away from where I am and far away from India. How does this possibly impact me? So now let us try to understand how this impacts. So slowly now we understood the geopolitics of the issue. Now let us understand the geoeconomics of the issue. Now, if we try to look at the geoeconomics, we have to understand the role that Russia and Ukraine play in the global trade. Russia is a very major oil supplier to the world, as well as a major gas supplier to the world. So as soon as the Ukraine-Russia crisis happened, all the trade was disrupted. And as a result, the oil prices were the first to shoot up globally. Whenever any global instability happens, its first impact happens on the oil economy. And we all know, as even Sir mentioned at the beginning, that once the oil prices rise, it shoots up the commodity prices everywhere. So for those of us who may not know, India imports almost 85% of its total oil. And as a developing country, we have tremendous energy requirements. And since this demand is very inelastic, it has led to a very high inflation. All of us have witnessed the rising petrol and diesel prices. Even the taxes on this cannot be reduced. Getting it into GST is a totally different topic, but the taxes cannot be reduced because the government significantly depends on the revenue from the taxes which it gets from petroleum, both the state and the center. As a result, now what we are witnessing is an inflation which has crossed more than 6%. And hence RBI today made the move of increasing the repo rate by 40 basis points to 4.4%. Now, further the impact of inflation that has been happening is that this inflation is not just hitting India, it is also hitting globally. Russia also supplies almost 40 to 50% of the total gas requirements of Europe. So what we are seeing is a global inflation happening across the world. And thus, just like what Indian RBI did, similarly, even the countries across the world are going for raising their interest rates. Now, this has an impact on the FDI. So first we spoke of the inflation because of the rising oil prices. Now we will talk about the FDI. So we see that from the stock market, the FDI is slowly going out. We see a lot of foreign investors moving out because of the inflation globally. Even the Federal Bank of the US has raised its interest rates. And thus, given the overall volatility in the stock markets and the uncertainty around the war, we see a lot of foreign investors moving out of the stock markets. So this is another impact that has happened because of the Ukraine-Russia war on India. The first was the inflation, and the second is the moving FDI, which is happening. Now, another significant impact, as we all know, we live in a globalized world. And in this globalized world today, we have something called the global value chains of supplies. What this means is that any single product which is in your hand, which is in your house right now, it moves through multiple countries. One very simple example that we can take is of semiconductors. It has been making news all this time. So semiconductors are something which require more than 50 different components, small metals, etc., to be assembled in one place to make that semiconductor. Now, Russia is a very important producer of the component called palladium. And because of the shortage of this, because of the war, we are also facing semiconductor shortages. Now, because of the semiconductor shortages, a semiconductor practically, you will find the use of semiconductor in every single appliance that you can possibly think of. Whether it is our smartphones, whether it is our laptops, the demands of which have significantly gone up after the COVID, whether it is even the household fridge, whether it is the auto cars that we have, the automobiles, everything, even the health space sector, the defense sector, everything possibly uses semiconductors. As a result of the global value chain disruptions because of the Ukraine-Russia war, we are facing a significant shortage of semiconductors in India, which has significantly impacted the IT industry. Automobile industry is facing significant the impact of the Ukraine-Russia war. Now, if we look at another aspect of energy, we have coal. Coal again has been in use for all the wrong reasons lately. We all know that we are facing power shortages and power cuts. Now, what has happened is that Russia is a very significant supplier of coal in the global market. And because of the Ukraine-Russia war, we are also having a lot of coal shortage happening at this point. As a result, a lot of thermal power plants in our country, which were operating on imported coal, they no more can afford the imported coal. As a result, they are all shifting to the domestic coal for producing power. Now, we all know that the domestic coal is already under short supply. And in this case, the pressure on the coal has already increased. So we already have a lot of supply constraints happening. At the same time, because of climate change, we see that we are all facing a heat wave right now in the country. And thus, a very high demand and a very low supply. This has led to an energy crisis in our country right now, again, because of the Ukraine-Russia war. So another significant impact in the area of energy, one being the oil prices rising, the second being that you have the coal crisis happening, which is also leading to power outages. Now, another good side, we only spoke of all the negative sides, a good side of the Ukraine-Russia war in terms of energy sector, the impact on the energy industry, is that since Russia supplies gas, so we also have this, India took the stand to buy discounted gas from Russia because of the war, a lot of Western countries are putting sanctions on Russia. They're basically not allowing Russia to trade, export or import to the West. As a result, Russia is looking for newer markets. So Russia has moved towards China, it has moved towards India. And India took the opportunity that, okay, Russia, nobody's buying gas from you, we'll do it. And so we got gas at a discounted rate. So that was one positive side on the Indian industry of this entire scenario. Now, having spoken about the energy sector, we will now move towards the food security area. Now, as we all know that fertilizers are extremely important for the production of food in our country. We are significant importers of fertilizers, especially urea. Now, in the fertilizer industry, a very important component in making a fertilizer is natural gas. Now, again, because of the whole shortages and the disruptions happening and the sanctions imposed on Russia, fertilizers have become extremely expensive. So for those of you who have clients in the fertilizer industry, again, you must be facing, you must find your industry facing problems in the supply bottlenecks in the fertilizer area, which is going to have impact again on the agricultural production. But on the good side, our government has announced a fertilizer subsidy to the farmers. So although probably the agricultural impact may not be so significantly impacted, but it will definitely have a lot of impact on the fiscal deficit of our country because of the high subsidies that will now go out. Another very important area which concerns us all personally, even in our household matters, is edible oil. We all never bothered to check where we get our edible oil from. And now suddenly we see in news that edible oil prices are rising. So it was not known until now, but 75% of our sunflower oil comes from Ukraine. And thus this whole disruption because of the war has led to soaring prices of edible oil, especially sunflower oil. So again, for those and there's another aspect also that I missed. I'm sorry. That Indonesia also in the geopolitics. Now, Indonesia also is facing rising inflation because of the war. And Indonesia is a major exporter of palm oil. So even if Indonesia has gone for an export ban, that means Indonesia is not going to now export its palm oil. So together, what we are facing right now in our country, which is highly dependent on imports for edible oil, is that we are neither getting supplies from Indonesia, nor are we getting our supplies of sunflower oil from Ukraine. And if we all know the applications of palm oil is used in almost every other FMCG product you can think of, whether it is chocolates or chips or even toothpastes or cosmetics. Palm oil finds its use everywhere. And as a result, even the consumer goods prices are significantly going up. In fact, for those who have read about the GST collections in April, the GST collections peaked to 1.68 lakh crore, which is the highest GST collections ever in the history. And one of the reasons, apart from the other reasons that has been attributed to it, is that our import costs have risen very significantly. And that is why the IGST collections have also shot up significantly. Of course, there are other reasons as well which are involved. As we all know, there are input tax credit restrictions which have now been put. There is also improved compliance. But this one, the rising import cost, is also one important reason of the rising GST collections. So all in all, till now, we have seen the impact that the Ukraine-Russia war has had on the energy sector, and thus the inflation and the fiscal deficit, where we spoke about the oil and the coal. Thereafter, we spoke about the food security, where we spoke about the rising prices of fertilizers because of the gas shortage. And thereafter, we spoke about the shortage of edible oil. Now, if we look at the financial aspects involved in the impact of the Russian-Ukraine war, one which we already spoke about is the FDI, that the investments are significantly moving out because of rising interest rates worldwide. So it makes India comparatively less attractive. And second is that the rising fiscal deficit of the country. Because again, we saw now that tax cuts were there on petrol. So that will affect the revenues of the government. And apart from that, costly imports. This is going to create some sort of a problem in the balance of payment. Next, again, that has personally hit all of us who have some exposure in the stock market. On the 4th of March 2022, the stock markets, they actually had to apply a circuit because the commodity market and the stock market saw huge fluctuations because of the war. Especially the commodity markets, because if we see, Russia supplies 10% of the world's total nickel, as well as we saw that it has an important share of the coal in the world. Apart from this, other commodities, which directly and indirectly are sourced from Russia, include palladium, which I spoke about in terms of semiconductor. The metal aluminium, also Russia is a major producer, corn and wheat. So together, Russia and wheat supply more than 30% of the global wheat production. As a result, the commodities market also, because of the Ukraine-Russia war, has been going significant fluctuations. Apart from that, we all know that in the event of any uncertainty, people first move to gold. It is basically a safe haven asset. And as a result, the gold prices also have started soaring ever since the Ukraine-Russia war. So that is another impact which we have in the area of stock and commodity markets. Finally, if we speak sector-wise, individual sector-wise, then certain sectors have benefited also from the Ukraine-Russia war. Which are these sectors? So basically all those sectors where we have Russian exports taking place, we see that the country stands to benefit, the exporters of India stand to benefit. Because of course, in an area where Russia and Ukraine were earlier exporting, they no more can export. And thus it is a golden opportunity for countries like India to capture that market. As you also must be aware, the Sri Lanka crisis also is presently on. Sri Lanka is in a total economic turmoil. And as a result, apart from Russia and Ukraine's export markets, India can also leverage the markets of Sri Lanka in commodities like rice and tea, as well as textiles. So there we have certain opportunities for the Indian IT industries, because all the investments moving out of Russia in Russian IT industries will now move to India, as well as the tourism sector can significantly benefit from this. Finally, another important area is defense. Now, everybody after the Ukraine-Russia war has largely realized that they have to become strong in their own defense requirements. So India significantly depends on Russia for its military hardware. And now with the West at war against Russia, they are trying to convince India to move away from Russia as much as possible, to reduce its defense dependence on Russia. In this context, the defense sector of India, especially now the government is focusing a lot on indigenization and domestic production of defense equipment. So going forward, we will see a lot of partnerships happening between the Indian industries and between the Indian defense industries, especially MSMEs, and European countries and US. In fact, the Prime Minister, the Honorable Prime Minister of our country presently is in Europe, and a lot is being talked about reducing the dependence in defense area on Russia. So again, for the defense sector, it is a plus that is happening. As far as Russia is concerned, Russia is also a significant exporter of steel along with Ukraine. And since Russia is no more able to supply steel to the world because of the war, it is also an opportunity for the Indian steel industry to now fill that vacuum and supply the Indian steel in the global markets. On the positive side, finally, it is almost the end of what I'm going to speak. On the positive side, for the agriculture sector, we already spoke about the negatives in terms of the higher fertilizer cost. But since Russia and Ukraine supplies so much quantity of wheat outside India, that is outside to the world, 30% of the wheat, as a result, Indian supply of wheat, Indian exporters of wheat stand to significantly gain from this because Russia and Ukraine are no more able to supply wheat to the world. As a result, we've also seen that the APMC mandis are not getting any farmers to sell wheat at all in the mandis. It is all going to the private procurers who plan to export this wheat outside to the country. So this is basically the large geopolitical implications that the Ukraine-Russia war has. We saw that the war in large affects various industries. It affects the larger investment environment in India. It also has a larger impact on the Indian fiscal deficit and the inflation levels. So all in all, I believe that it is extremely important to be aware about these developments which are happening globally so that we not just understand the implications that it has on the Indian industries, but also we're able to predict the future scenario going forward as to which direction the industries are going to move into. So this is largely about the impact. And finally, one more thing is that increasingly there are fears that China may also take over Taiwan, just like Russia showed its might and took over Ukraine. There are also fears that China might increasingly go towards Taiwan, which also shows that Russia and China in the future may also get closer to each other. And all this eventually may add to the instability in the region. Now, we all know what Taiwan has semiconductor. A lion's share of the total semiconductor in the world comes from Taiwan. And that is why we see that our government has recently launched the program for domestic manufacturing of semiconductors. We have in fact set aside a sum of 75,000 crore rupees for the semiconductors production domestically. So again, that is a significant positive as India is slowly trying to become Atmanirbhar. So defense industries, auto industries, IT industries, these are industries where the government will try to bring more and more self-reliance going forward. Apart from that, we will also have a lot of FTAs being signed, the free trade agreements and export markets being opened in Europe so as to reduce our dependence on Russia going forward. So this was largely about the impact that the geopolitics of today has on the Indian industry. And being a chartered accountant, being in this field earlier, I remember how I used to confine myself tremendously to the core part, to just the taxation part of the financial advisory part. I would like to congratulate the Institute and the Women Empowerment Committee for holding the session, and I'm sure there will be sessions from other speakers in times to come, so that as female chartered accountants, we also are updated on what is happening and we can go and talk with confidence about the geopolitics and with the industry members. We can empathize with them, we can understand their concerns and render our services better. So I would like to thank the Women Empowerment Committee for giving me this opportunity to address this meet today. Thank you.
Thank you so much, Samiksha. It was such a delight to listen and to hear you. It is definitely important for us as chartered accountants and more so as women chartered accountants to have knowledge of all this, because as you rightly said, we confine ourselves more to the core of taxation and audit and those topics. But what I feel is definitely we should know what's going around, because economics cannot be separate from our core business, from our core practice, right? My clients are affected by it, so definitely it indirectly affects me. If I can bail my clients out, if I can help them out in some restructuring or anything in their tough times, considering this geopolitics, definitely it gives me a lot of upper edge in practice and going forward. Here, before I take up a couple of questions, I would also like you to put light upon 2-3 aspects. One is, besides this geopolitics, why is Ukraine that important for Russia? I mean, the strategically and locationally, location-wise, and also, why is India mum on, or maybe is it India is doing right in not taking a stand of any of the two, that is the Western world or Russia, or it is not able to, I mean, she's not able to do it because of certain factors which we should know.
I would be most delighted, ma'am, to answer both those questions. In fact, they're extremely relevant questions. The war is happening at such a huge scale. We are seeing so many casualties, even civilians being killed. So the question that you asked, that why is Ukraine so important for Russia, is a very pertinent question. So it has to be understood both in terms of geopolitics and geoeconomics. Now, Russia is separated from the rest of the Europe and US mainly by this country called Ukraine. And if Ukraine tomorrow becomes pro-US or pro-West, then it is an existential and security threat to Russia, because then you could basically wage a war from Ukrainian borders. And we all know the might that US and the West have in terms of their military prowess. So that being the geopolitical reason, there is a historical distrust between Russia and US. Even in the year 2014, when Russia annexed Crimea, there were sanctions imposed on Russia. And ever since then, Russia's economy has taken a hit. And thus, Russia no more wants any Western interference at all in its backyard. So Russia basically wants its backyard free of the US and the West. This being the first reason. The second, more important reason, actually, why Ukraine is so important to Russia is that Russia's geography, if we all understand Russia's geography, Russia mostly lies in the northern hemisphere. And most of the ports, the river ports, the coastal ports that Russia has, they more or less get frozen in the winters. And as a result, it becomes very difficult for Russia to gain access to the maritime routes through which all the world trade happens. Now, Ukraine's geography is such that Ukraine opens into the Black Sea. And through this Black Sea, if Russia gets control of Ukraine, then through this Black Sea, all the trade of Russia can now happen, because the Black Sea has all the warm water ports. And thus, essentially, if Ukraine comes into the control of the US and the West, what will essentially happen is that they can block the Black Sea, and that way it can totally starve Russia of all of its export incomes, which it's also doing through sanctions. And these are the two reasons why Ukraine is extremely important. One is that through Ukraine, Russia has all of its access to the sea through which it can conduct all of its trade. And second, that there's a Cold War distrust between Russia and US and the West. The West is a nuclear capable area, and so is Russia. And it does not want any of those weapons in its near backyard. So this is answering the first part, the first question, ma'am, that you said as to why Ukraine is so important for Russia. And now answering the second question, which every citizen of the country has been asking, why is Modi ji not speaking at all about this? Why is he not criticizing what is happening? Why is he not taking a stand? So the US has told India that, you should take a stand. You should criticize Russia for what it is doing. The Prime Minister is now in Europe, and the Europe is also criticizing Russia, obviously, but the Prime Minister remains mum. So in my opinion, in fact, the foreign policy which has evolved now under our Honorable Prime Minister Modi is one of the most calibrated and well-balanced foreign policies. The world, even though on the face they criticize India's stand, they all understand India's concerns. Now, it is very, very important for India to not pick sides and to have good relations with both Russia and with US and the West. Let us try to understand why. Russia is the country from whom India significantly depends on for all its military hardware. So we have bought a lot of submarines from Russia. We are now, like you would have read about the Israel-Palestine conflict. Whenever any missile comes, you have a defense system. Which is going to basically protect us from Pakistan and China in the near future. So there is a tremendous defense relationship there. Apart from that, Russia is also very, very important because as we all know with the China-Pakistan economic corridor, China and Pakistan have been getting very close lately. And when we have two hostile neighbors in our immediate neighborhood, we cannot afford to have China getting any closer to Russia additionally. So now it is very important to counterbalance there because Russia is obviously getting closer to China because both are anti-West, both are anti-US, and the US has effectively laid sanctions on Russia. So Russia is now moving closer to China. But we don't want this axis of Russia, China, Pakistan developing because then it's totally going to be a disaster situation for India. Also, we have had long historic ties with Russia. Russia has been a very long, trusted old friend for India. Even when India was at war with Pakistan, even during the Cold War, when everybody was against India's nuclear program, it was Russia who supported us. And that is why we cannot afford to lose somebody like Russia. So this is one reason why we are not criticizing Russia outrightly. We have definitely raised voice against all the killings that have been happening. India has been extremely vocal that there should be peace. India has made a statement that we are against the war. We are not against any individual party. We are against the violence and the mindless killing that is happening. We stand for peace. And in fact, you will be proud as an Indian to know today that it was Europe who has now appealed to India that you please try to influence Russia because you are in a capability who has good relations with both. We are among the very few countries of the world who have good relations both with the West as well as with Russia. So today, in fact, we are in a position where we have been appealing for peace. And we have basically taken a very calibrated stance, given our own national interest. So basically, when somebody asks us that, are you pro-Russia or are you pro-US or the West? Our stand is that we are pro-India. We are basically trying to safeguard all the national interests that we can. But at the same time, we've called for peace. So this is why India has basically kept a very neutral stance in this entire scenario.
Very rightly said, Samiksha. That's really enlightening. We really need to know what's going on. Many a time we always keep on, in this, I would say not the geopolitics, but the nation politics, there are people who are just finger pointing on the center, stating they are not taking a stand because they are afraid of China or maybe X and Y. But it's really important that we have been stable enough or empowered enough to take that stand. Today, whatever power US has, whatever power the other European countries have, none of them, they can only request us. They can request to, in fact, bring this peace in the world, but they cannot force us to take a stand on their side or anything. So this is what probably the center has done over the last few years, and it is really a proud situation. And about the geopolitical and the economic impact, which we just spoke about, we all are concerned about our budgets being hit so heavily. And that is the reason we all have again started finger pointing on the center as to why excise and other taxes are not being reduced on fuel, etc. But we all also again need to, I think, understand that my imports, which are getting, even the government imports have become costly along with the private imports. So to fund that, we need that money. So definitely this hit along with the world, we have to take for a while. And we are just hoping and praying that this comes to an end very, very soon. One measure that the center took, Mr. Modi and his government, is to bring back all our students so safely back in India and in such a smooth manner is again very, very nice and really credible. And now one more, I would say the impact of the war would be that Ukraine is so badly impacted. I really don't see a I mean, medical student going to Ukraine in the near future. So my medical seats in India also are going to be impacted very badly.
Yes, definitely. They are all trying to get their courses back, get the studies on track.
Yes. So thank you so much. I am not able to see any queries from the participants. So I will wish you a very all the best and thanks a lot for all that you have shared with us. All the negative impacts and more importantly, the positive impacts that the war has brought to our country, to us, to each individual. And lately there was, I will just share one news update which came a couple of days ago that India now needs to learn how to cook in low oil because my oil budget is being badly impacted. So my sunflower oil is getting costly. And the best part is the Atmanirbhar campaign, which is run by the center, has really helped us in taking the stand also. Because today, none of the country can show eyes stating that you are dependent on us. We have started becoming independent in true nature. So that's really good. And all that you have shared has really value added to each one of us. Thanks a lot. We look forward to have your sessions further as well. Thank you everyone. Thank you, Samiksha.
Thank you.
So with the WMEC team, we can close the session now, I guess.
Yes, ma'am.
Yes. Thanks all the audience to be such a patient and enthusiastic audience. Thank you and see you again. Good evening. Goodbye.